So what reason did Sloane Robinson give for shuttering?
It's all about fundraising for Sloane Robinson, Anna. They said that in their investor letter that they actually performed pretty well given the market conditions, but they weren't able to raise the money they need to continue operations. They said that most of what they're working with is just legacy funds from prior gains in their hedge fund, which is really remarkable because Sloane Robinson is a really well-named known here in the City of London. So you'd think that based on that, they'd still be able to attract funds even given this very volatile environment, but they haven't been, which really shows what a difficult environment it is for hedge funds and others. So they're not completely shutting down quite yet. They are returning funds, winding down two of their global funds. They say they're looking for a home for their emerging market and frontier funds, which is more of what they're known for. And they're going to continue to invest the founders' funds. I just want to point out this one quote they said in their letter to shareholders that Bloomberg saw. They said, "We are all now in our 60s and are looking to step back from the business."
I would want to as well. Well, actually, I don't know because I'm not there yet, but I feel like I would want to in my 60s. It's not an isolated incident, though. That's the thing, right? We've seen a lot of high-profile hedge funds, many of them run by, men in their 60s and 70s, shut down. Shouldn't they be thriving more in a volatile environment like this? Shouldn't they be, killing it here?
Yeah, you think so, or at least that's sort of what you hope or what they sell themselves. But often a hedge fund is just saying, look, we're going to protect you from some of the downside. And perhaps in the beginning of the March sell-off, they were able to do that. But looking at the returns year to date, just generally for the hedge fund industry, they're pretty much in line with what global equities are doing. Judging by equity hedge funds, of course, we have to have a fair comparison here. So if this is the picture you're looking at, why not just invest in an index fund where you don't pay as much fees as you pay for a hedge fund? It's really difficult to say we're better than an index fund when your returns look so similar and your fees are so high. Now, it used to be that just having a big name would be enough to attract funds, but we're seeing that fail. We're seeing the likes of John Paulson, for example, not too long ago, we were talking about how he's converting his fund into a family office. But the fact of the matter is, not only is it really volatile right now and hedge funds are struggling to capture that upside in the volatility, there are just so many alternatives, and not just alternatives when it comes to different equity vehicles, but alternative asset classes that are getting easier to access. We see private equity funds, for example, they're having no trouble fundraising in this environment. They're sitting on record cash piles and continue to get more interest. So it's clearly not that investors are just all waiting on the sidelines. They don't want to be invested, be it hedge funds or any money manager. They're just saying, look, the cost of hedge funds is not starting to make sense, and we don't care if you have a name brand. We're still pulling our money or just not investing to begin with. And that seems to be the story that continues to emerge as we see hedge fund liquidations hit their highest level since 2015.